Good morning, everybody. It is Thursday, June 6th. I'm here with Shay Boloor. We have a lot to cover. Shay, how you doing this morning?
Uh, it's brutal morning. It's a very bloody morning. So I think I need to have more caffeine to be alert at the open because things are moving. Things are flying right now.
Yeah. Well, Shay, I don't know if you guys know, Shay's on the West Coast, so his commitment to everybody is real. You're a trooper, as they say. Well, we're looking at U.S. stocks down. They're down about 1% overnight. Internationally, Europe mixed, while Chinese stocks are up. Bitcoin flat, just below 90K. A lot of people in the crypto world talking about this summit tomorrow. Have you heard much about this, Shy?
I haven't, but I think maybe that explains somewhat of why Bitcoin's is holding some strength this morning. Like they're 91, 92,000 when the Qs are down 1.6% pre-market. So like it kind of makes sense on why it's showing some kind of strength for maybe a catalyst being talked about tomorrow.
Yeah, I mean, it looks like a who's who. I mean, it's a bit of a sausage festival so far. Although you have confirmed and unconfirmed, so maybe Kathy Wood will show up. But you got Saylor, you got Brian from Coinbase, you got Vlad from Robinhood, Kraken, Ripple, of course. David Sachs, of course, going to be in the mix. Uh, who from that group, Shy, would you want to talk to most about crypto?
I definitely want to talk to Saylor because I think he might be. First off, he could either be a pioneer or the Grim Reaper for Bitcoin. I don't know which one. He falls somewhere in the between. So I think to pick his brain more on like why he's doing what he's doing because he's quadrupling down on Bitcoin and there is an elevated risk now associated with that Bitcoin price that wasn't there before Saylor. Now
Yeah.
Saylor's like over leveraging himself, buying Bitcoin that if it doesn't work out, that is a headwind on Bitcoin for who knows how long.
Yep. Do you have any general thoughts on strategy as a stock? Do you
Oh, I think MSTR is just like an absolute Ponzi in my opinion. But I am a TradFi guy, so like maybe I'm just like the
yeah.
wrong person to ask. I just think like my Econ 101 brain is just like this won't work. I get
Yeah.
it. He's trying to accomplish, being the essentially crypto treasury, but like he's doing it too quickly. Like it's just too aggressive,
Yeah.
and it feels like I don't know if it goes down to 60,000, for example, like that could be the case. Nobody really knows. Like if SPY's below $500, Qs are just like we're gonna have a 2022 like pullback or 2021 like pullback. Like crypto's gonna suffer as well, and that might bust Sailor's like strategy for sure.
Yeah. I mean, he's definitely out there. One place he's not out though is in the nominee set for the Cashtag Awards. Uh the huge shout out to all the Cashtag Awards nominees. Stocktwits is hosting the biggest night in social finance. It's happening April 30th in New York City. It's gonna kind of be like the Oscars for people who are terminally online and on StockTwits. And we have a very special announcement that our own Shy Boloor is nominated for Financial Creator of the Year. Shy, congrats, man.
Appreciate it. It's kind of crazy how quickly this has happened. Like I can give you guys a little synopsis of my journey on how I got here. So I s- I'm a newbie. I have like I always describe myself. I have that pregnancy glow on FinTwit because like I just started two years ago. Like I was not there part of the bubble bursting. People don't have scars associated to whatever my insights were. So like I do have that glow. Um, and the reason I like, jumped on the FinTwit train so late is my girlfriend at the time, fiance now, she was just like absolutely sick of me talking about stocks to her all the time. Like she rolled her eyes. She was just like, she's not interested in that lane at all. So I was like, I need to challenge the energy somewhere else because like I it's like I have it like in me. Like 2022 was the year um the market pulled back significantly. I was like, this is an insane opportunity. Like my whole corporate strategy, like all I do is model out large sets of data, create a narrative. Like that's very applicable towards stock investing, to be honest. So I was like, I think there's a massive opportunity right now, and I think there's a niche on FinTwit where mm, communicating a narrative that's digestible for the mass retail was missing. A lot of people were way too technical. A lot of people were way too just like high level. There really wasn't a democratization of institutional level research for everyone else. That's when I was like my niche. I think I could fit that niche. So once I started creating like these all nice looking charts, because like I have an Excel model, I do this for my career. I just leverage it from there. Shared my growth portfolio from like scratch. Like, listen, here's 100K in a growth portfolio. Track my performance. I think we can hit a certain milestone at 5 years, and then it just took off from there because, like I said, there was a niche out there, especially in growth tech, where there wasn't that many people talking about AI at the time. Like there really wasn't. Now everyone is. But 2 years ago, nobody really was. And I was like, this is gonna be revolutionary. Like secular shifts like this don't happen every once in a while. And I just channel all that pent up energy towards FinTwit or stock savvy shy persona. Like when I initially launched it, I called it my Hannah Montana era because like it's just like I just had my two sides, like totally different from my personal life, stock
The
savvy
best
shy
of
to
both
shy
worlds.
Boloor. Exactly. So
I
I
love
love
it.
how
Were you always into investing? Like, what do you remember the first stock you ever bought? Like as a youngin?
yeah, I mean Apple obviously was the first one in high school, but like
Okay.
my parents were very against the W2 life. Like my dad never worked a W2. My mom never really worked one as well. Like they suggested not to do that. They just didn't like it at all, which kudos to them. I think I'm going to probably follow the same kind of advice to my offsprings, but that they just told me like make my number one pillar of my life was like make money work for you. And from the get go, I've always needed to follow that philosophy. Like whatever income I made, like I had to make sure they were working for me 24/7. So I started off in real estate initially, and then I divested into equity markets. Once I started learning more skill sets early in my corporate career, when I had a hot minute of working in corporate strategy and tech, working in healthcare, and like even I had a brief moment in iBanking, which was just not my thing. I did not like the hours committed, but
Yeah.
yeah, I'm here for it. I love it. And 2 years in, I still have the fuel to get up at 3:30 every morning.
Still have a
Uh,
fiance, so that's good.
yeah,
Check,
exactly.
check.
100%.
Looking at who else is nominated, anyone in there you're worried about? Like who we got you up against here? I think I saw our buddy Austin Hangowitz, Robert Croak, who was on the show, Josh Brown. It's a tough one, downtown Josh Brown. How you feeling about your odds here?
I kind of want to have a handicap because I feel like the top two right there, there's two people and for each one. I'm like, okay, well, that might be twice the popularity. So like I want a little handicap, guys. But no, I mean, these are goats. This I'm like honored just to be associated with these like three other candidates. Like we just talked to
You're doing the
Robert.
thing. You're doing the thing
I'm
they
pr-
do, where they're like, "Oh, I'm just happy to be here with my
I'm just
heroes."
happy. It's true though. I mean, first off, Josh Brown is a freaking OG goat, and everyone knows about him. Robert Croak, you guys just heard him this week. Like he is so insightful. We have Austin on every other week. Like he's like an incredible peer. I always compare myself with. And Charlie, like he is just like look at his Twitter. Like he is just fire content. So like honestly, me being nominated, I'm probably just gonna put underneath all my photos hashtag nominee, and even if I don't win, just like the Oscars, like oh Emmy nominated um, actor, I'm just like hashtag nominee Shy Velour on everything I do now going forward.
Well, hey, let's get you a head start. If everyone can go to stocktwits.com/rewards and vote for Shy, I actually just did as you were just talking. Let's do that and keep
Appreciate
it
it.
rolling and check out the other categories. There's a lot of really fun categories. Going back to the markets, looks like we got a bit of a pulse, a little bit erratic, a little shifty. I know before the show, Shy, we were chatting. You're feeling a little about today, but 9 of the 11 S&P 500 sectors closed green Wednesday. Materials led, energy lagged. What do you make of all this?
So yesterday, from what feels like now, it was a dead cat bounce. We were oversold clearly. I mean, Q is going down 8% in a matter of weeks. Like that's just like that's quick. It's like I think we actually went down 10% at one point. And I think what worries me is we keep bouncing off the key level we need to bounce off of. Like we need to go above the 40-week SMA, the 200-day SMA on the week. Let's just go over the 200-day SMA on the daily chart. Whoops, my thing's freezing. We've tested that level twice now, and we've bounced it. And that level is 492 to 493 on the QQQ. We have never, excluding the yen carry trade crisis, which was a black swan event, I've been calling out where it's been 2 full years since we even tested that level, like 2 full years. Now it feels like we're sitting at that level all of a sudden after 2 years of just like not even being close to it. And I'm a little worried that this is going to be the support is going to flip to resistance. And if that occurs, we're going to break down structurally in the charts. And I think we're going to have a capitulation fear type of move downward if we don't bounce at this 492, 493 level. So I think I'm watching out for that level right there. But to be honest, like I wouldn't feel comfortable until QQQ went above 520 again. That's their 50-day SMA level. Usually that's where the medium tone is on are things good? Are things bad? Like right now things could get ugly, but if you go above that 520 level, I feel like that's structurally recovered enough. It's not dead cat bounce. It's we are getting to the FUD and we got the worst behind us near term. We're recovering now. We're so not like we're not close to that at all, and we're just continue showing weakness. And I don't know. Like who knows? Like Trump could say something about tariffs are removed, and we fly upwards. And that's the issue with this market, where it's headline driven.
Yeah.
And I just think we're teetering on breaking structurally, and I'm just watching that level. And it's a little worrisome that we just faded yesterday's move completely pre-market on. I didn't really see any news story that really would drive that, except for it's a structural breakdown potentially.
Yeah. I was gonna ask if you think if something were to happen to make it go one of either direction. It sounds like the tariffs thing. If somehow that was like, yep, just kidding, you think that's would flip the trend?
Yeah, I mean, I think the recession fears are becoming more elevated now, and I think the way it goes is tariffs, inflation, recession. So I think markets a forward-looking mechanism, and I think a lot of the negative GDP growth we're seeing is businesses front-running potential tariffs. And if these tariffs are higher for long, like they're staying here much longer than expected, it's going to affect a lot of their earnings this upcoming cycle, a ton of them. And you already saw in the previous cycle where Q1 near-term guidance was impacted because they're being conservative. Like they're not going to want to stick their neck out on missing their upcoming guide when there's just so many different moving parts now, macro-wise. So I think it's just a really noisy time to be in the markets, and the market hates uncertainty at the end of the day. And after the 2 years we've had, like, why risk the biscuit and stay in the market when you can take some chips off the table? You can still get 4.5, 5% on the sidelines and just wait out this high stakes poker game. And I think a lot of investors, high net investors, are kind of having that mentality, or go ex USA. Like I think the Germany markets, the Chinese markets, like they're doing really well this year. It's really more of a US story. And I think because the dollar is weakening, that's a benefit for ex USA. So there is pockets of you can probably outperform, but right now feels like we're breaking down a little domestically, but internationally, I know my co-host in the Investing in the Boys Logical Thesis, great follow if you guys don't know him. He has been positioning himself in ex USA past month, so I think that is an interesting angle for the near term.
When you say on the sideline 4 to 5%, are you talking T-bills, high
T-bills,
interest? Like,
yeah,
okay.
yeah, T-bills. But again, like 10-year yields, like flashing signs of worrisome behavior. I also think that the implications of Doge and the layoffs is just like starting to become realized of like, oh geez, like this could be brutal, and it could be brutal not just in consumers' lives, it could be brutal in the software space. For example, like the government uses a ton of software from companies that they don't really need to use as many as they do. It can get consolidated. That's going to be a massive impact for a lot of software names. That kind of methodology can be applied for so many different industries as well, because it's a bloated expense that the government used to do. You want to de-bloat, you want to get a little more slim, it's going to come at the expense of a lot of the enterprises contracts. And you're also seeing like the enterprises aren't, the multinational corporations aren't going to be feeling the grunt of the tariffs. It's going to be the consumers. The consumers are going to, there's going to be price hikes, and the consumers are just going to have to pay more. And that's like, it feels like a PTSD situation of like inflation might go higher again, and it's going to be at the expense of consumers. And this is at a time when layoffs are rising, interest rates are still so super high, and you're seeing inflation like at levels that, fine, maybe it's not increasing that much year over year, but 5 years ago it's night and day, and now it might get even worse. So it's just like a really bad stew of news.
Yeah, I was just reading like the average American is not looking at the stock market as a metric for success. They're like looking at their grocery bill. And so
Yeah.
there's an interesting conversation to be had about like how long do people gut that out before they start kind of turning their sentiment. But I want to get into the jobs numbers because I know we mentioned briefly yesterday the ADP jobs report that dropped, big miss. They reported 77K private sector jobs added in February. It was supposed to be 148K per the estimates. There's some interesting like data if you double click within that. So the most like net losses were in the very small businesses, 1 to 19 employees. They seem to be shedding at a higher rate than the other size businesses. And then there's also some sector trends. So most jobs were added: leisure, hospitality, professional and business services, financial services, and then the most were lost in trade, transport, utilities, education, and health. Shay, when you look at this, what do you think that those sectors, especially like in the lost category, does that align with a lot of the government cutbacks, or are we not seeing that quite yet?
Totally. I think the ones that those sectors that lost the most, that's the most government correlated, to be honest. So when you miss 50%, like it's not, that's
Not good.
that's not good. And it's usually something from like a, not a one off, but like some major catalyst occurred recently, and that's Doge. It is. It's not just all of a sudden companies said no, we're not going to hire, and they just all got together in some kind of conference and decided that. That doesn't happen. This is more of like response to something catalytic that drove those that miss, and it's Doge. A lot of the government correlated jobs are probably getting axed a bit. A lot of the contracts are getting like 86. Like I think, yeah. So I think it's a beginning of something that's actually going to be substantial. And what Robert was saying earlier in the week is accurate as well. Like short-term pain for long-term gain. Like we needed this. It's just it's going to be disruptive in the short term. And I think this combined with like everything else is happening, it's starting to break a lot of investors like confidence in 2025 of what the market's going to be like.
Yeah, and in fairness, that's what they said was going to happen. So they said that would happen, and it's happening. So there you go. Um, Getting back into winners and losers, I want to jump back to the Cashtag Awards because I know we got a little excited about your category, but I want to flip through some of the other categories. Maybe we could do a rapid reaction to some of the other nominees and categories there. I know there's one for trade of the year. There is a category for your favorite brokerage app. That's an interesting one. I know many people use multiple brokerage apps. Shai, do you have a preferred brokerage app that you use?
So I have two. I use Fidelity and I
Okay.
use Robinhood. I go on Robinhood every single day. The UI is just addicting. I just my net worth, my income keeps going up and up and up. I still use Robinhood. I don't call me the early millennial for that, but either way, I still don't have confidence on putting all my money in Robinhood just because, like, I don't know, you never know with the GameStop fiasco. And that's the issue I've always had with long-term mode on Robinhood because even for me, 5 years later, like, I don't know. I just want, maybe it's just like, I can't have all my eggs in one basket. So I do use Fidelity a lot. I think 40% of my broker, portfolios in Fidelity, 60% for Robinhood, but those are my primary two.
All right. Yeah, like it's interesting. People kind of toggle and they have different use cases for the different apps. We also have like trade of the years there. What else do we got? It's very small for me, and I'm don't have my glasses on because somebody on Twitter kept giving me shit for wearing my glasses. So shout out to you, sir. Um, we have the best new ETF is an interesting one.
Let's
What are you seeing
see.
there?
I mean, Rex Shares is the best, one of the best out there. They
Yeah.
produce great ETFs. I just don't like MSTR, so I think I don't know. It has to be Bitcoin related, to be honest. I think Bitcoin, those ETFs got announced this year. I mean, last year. It's a brand new concept. And I think they're doing a great job on making it safe and applicable, accessible for a lot of the mass audiences. But like, I don't know. I gotta go with my boy Tom Lee. Like, especially with like that ticker Granny. Like, that's a great ticker, to be honest.
I was gonna. Is that what I think it is? Is it just like boring things?
No, it's not. It's great. It's great, innovative stuff. I think they're making it's ironic a
Oh,
bit, is my take on it. Because it's large cap tech essentially, but I don't know. If,
okay.
it might be boring for them because they're very small cap, growth oriented. But yeah,
I thought Granny was like, maybe it was like waste management, like some of these where it's like not exciting to talk about every day, but decent. Okay. Let's look at educational content creator. We got Brad Freeman, Bob Elliott's one of my favorite follows on X, smart dude. Wolf Financial, Brian Shannon. Shy, who's your inspiration when you look at FinTwit? Names like this, maybe others. Who do you love to follow?
I mean, first off, Brad Freeman's incredible, stock market nerd. He is just, I don't think there's another content creator that gets in the weeds like he does. Provides great alpha, but I gotta go with Wolf Financial. Might be biased. I love what Gov, the CEO of Wolf Financial, built. He has built something substantial in the FinTwit arena that wasn't there a couple years ago, and now it's the kingpin of FinTwit, and that's something that takes a long time and strategy to do. And I think he provides a platform for a lot of great educational content creators to go on and communicate what their alpha is, what their angle is, what their education is, and that didn't exist before. Like Wolf Financial is Spaces, and Spaces is a great feature on FinTwit, on X to learn about education on stocks. So yeah, I got to go with Wolf Financial probably.
I was gonna say the same thing. They're synonymous with state spaces for me. Every
Yeah.
time I open the app, there's a spaces with Wolf Financial, and there's like thousands of people in it. It could be 1 a.m. on a Wednesday. It does not matter. Also, I'm like, do
100%.
we need a new name for FinTwit because of the X thing? Because I guess we just keep calling it FinTwit.
FinX sounds weird.
FinX
Sounds like
sounds very
you're
weird.
finessing. Yeah.
Yeah. All right. We'll keep it as is. Um, Market newsletter of the year. All right.
Daily
Obviously, the
rip.
daily rip.
Daily rip.
Daily rip. Got some other good ones here. Any newsletters you read that are missing there, Shy?
I gotta say mine. But
Like,
whatever. I guess I can only be nominated for one award, guys. No, I
yeah.
mean, I think Stock Market Nerd has Brad Freeman has a great one. To be honest, like I newsletters, like I wish I had more time for newsletter. Like I
Yeah.
just dig into companies' financials and like their own investment presentations and comments and the sell side research on the street. Newsletters is great for trying to learn a lot early in your career. The
Yeah.
issue is like I think I might be past that stage and I don't have
Oh,
the bandwidth
wow. You
for it.
transcend newsletters.
I transcend them now. I'm yeah, 100%. I know how the sausage is made as well, so it's like ah.
Well, hey, if you guys don't have a preference, Daily Rip is right there for you. And if
hmm
you don't already read that, you should, because it's just a written version of what we're doing here, a little bit more well articulated and in your inbox at a consistent time every morning. Let's look at the best AI financial product. Interesting. Um,
FinChat. Everyone needs to use FinChat. It is by
okay.
far the best dashboard for KPI metrics.
Okay.
And you get the transcripts. I don't know how they do it. Within minutes after the earnings report, like a call, like within minutes. It's just like bada beam, bada boom. You'll get it ASAP, and you'll see a lot of the cool metrics under the hood that you need to track to follow a company's journey. So like the NRRs, the data center percentage revenue for Nvidia, and you can do. It's just the UI is incredible. It's very user friendly. Like you guys need to check out FinChat. FinChat. It is like I use it every single day, like without hesitation.
All right. That's a clear front runner for you there. Investing product of the year. I
Cool. I
like
mean,
TradingView lately. Honestly, I feel like I was like not using TradingView a lot, and I think they have the stupidest, easiest, best feature, which is just the ability to quickly create a chart and download it as a nice, clean PNG. And I feel like not enough people do stuff like that. So that's my pick.
so I'm gonna pick an other, and I'm gonna put in TrendSpider. I think TrendSpiders
Ah,
might be the most underrated investing product out there because everyone talks about TradingView, like Katie, like they all agree with what you're saying about it. That is the go-to, but like I think TrendSpider is like that monster that nobody really is talking about. It's a competing product to TradingView. That's just like there's also a loyalty to investing products. Like if you use an investing product, like you just don't get out of it because you're in that comfort circle. Like it's just like it's hard to do charting on some other platform that you're just not used to really. But I think trading TrendSpider is incredible. If you guys aren't aware of it, like you guys need to like really look into that because I think the UI is simplistic and they have like their data that they infuse as well is just like the best out there, and that's why they charge what they do. They don't really have the freemium model like TradingView does, but there's a reason for it because TrendSpider is high quality in my opinion.
you're about to get that chopped up and put in an ad against your will, so you should contact them now for royalties. I like quarter too. I'm a words person. I like to read into the things that are said and not said in the earnings calls, and I love just like reading through that verbatim. And I think quarter does a good job of recapping those. Crypto investor of the year. I'd have no opinion here. I'm sure they're all amazing humans. I know Michael Saylor. That's the only one I know. Do you have
I'm,
any thoughts, Shy?
I kind of want the Trump family to be part of this.
Okay, Melania.
But, Melania. No,
Can we write
I mean,
Melania in?
out of all these choices, I gotta say, I don't know, Michael Stiller is succeeding in what he's doing so far. So I have to put it on him because he is like a trailblazer in what he's currently doing right now. So,
Yeah. What about
uh,
Dave Portnoy? I feel like that's a snub, but maybe next year, you know?
or yeah, Hawk Tuah maybe too. Like,
Hucked.
yeah,
I don't know if you can write in, but if you can write in, you should write that one in. All right, I know we're getting up near the bell, and I know at the other side of the bell, we have a lot more stories to go over, a lot more earnings to go over. I think for now, the big story pre-market is Trump hitting pause on the car tariffs for now. So GM, Ford, Stellantis rejoicing. How long does that last? It's a month, right?
again, it's bark might be louder than bite, guys. Like I really don't think this is going to be actual structural change.
Yeah.
Like 20% of the U.S. GDP is in U.S. consumers. So like there, a lot of like countries will be suffering substantially if there's a tariff war. Nobody really wants that right now. So I,
Yeah.
I think that's why we caught a bid yesterday. Maybe I think on that news story of the delay in 1 month. I'm trying to figure out what caused the intraday swing. Can't just be technical from bouncing the 200-day moving average. I think there's something else that caused it. But yeah, I don't know. This morning it's getting ugly.
Yeah, it feels like I'm looking at your basketball. Like it feels like a vibe shift. You're like the NBA players that are like just purposely chippy and they're just like pick fights with anyone. Like I don't know,
Yeah,
Draymond
it's a
Green or
Magic
something. Like I
versus
feel like that's who
Larry
we are
Bird.
lately.
Yeah.
We're like, oh, Canada, like screw you guys. Like Canada's like, wait, what? Like I just think we've changed our persona a bit and we're just like that chippy, like we're gonna like knee someone in the groin. And like that's who we are now. So oh, and there's the opening bell. We are off to the races on this Thursday, and it's been an exhausting week. Let's get into some earnings recaps from yesterday. I know we teased a few of these up. Marvell Technology, MongoDB. I know you're a Mongo boy, Shy. They're both down double digits. So what happened there? What's the damage?
It's funny you said that. I just trimmed some MongoDB right now.
Like right now?
Just right now. I wanted to after the bell.
Breaking
Right.
news.
Breaking news. Yeah, Mongo's. It's it was always a smaller position for me because in the stage 2 of AI, I'm like, I just think that they're kind of positioned to benefit substantially from agentic AI because like as AI increases their reliance on unstructured data, the demand for like scalable, flexible databases is going to be through the roof. Like a lot of these clients are moving away from those legacy relational systems. So Atlas should be a major catalyst, get a major tailwind for all this movement, but we're not seeing any signs of that from MongoDB at all. Like their growth remains steady. It's not as explosive as I thought. They're notorious for sandbagging, but to an extent, like they have to grow up a bit. Like you can't just keep sandbagging and just destroying their earnings every cycle. It's nauseating.
Can you define sandbagging in this context? This is new vernacular for me.
Okay, so for MongoDB specifically this quarter, they were supposed to bring in $520 million in top line sales. They came in at 548. That's
Okay.
an 8% beat. EPS 67 cents. They came in at $1.28. They doubled their estimates. And now the guidance, they're supposed to EPS $3.39 for the full year. They came in at $2.53. They
Okay.
continue just like undercut
Mm-hmm.
whatever estimates are, so they look like they're over delivering on their results. Like,
Got
oh, it's a
it.
strong print. I'm like, come on, at a certain point, like you need to show more confidence or be more accurate in your guidance. Like it's getting corporate governance is like not doing well in my opinion for that. And
Yep.
either way, I think the biggest issue right now for MongoDB and why I'm trimming is Atlas, which is I think it was 70% of their total revenue, isn't seeing the kind of workload expansion I expect to see at this stage of AI adoption. Like enterprises are clearly deploying AI applications at scale right now. Like they're in the exploration stage, and AI workloads require like an insane amount of, like I mentioned, like real-time flexible data storage. And MongoDB Atlas should be one of the biggest beneficiaries of this shift. Like its document-based architecture is purpose built for AI models that require that unstructured data, real-time retrieval, scalable storage that Atlas has. But right now, like I don't know, companies are training and deploying LLMs at a rapid pace, and that should be increasing their database spending. But like AI native startups should at this point be standardizing themselves on Atlas. But we're just like, and they should be scaling their usage, but we're just not seeing any evidence that this is happening at a rate that's going to be moving the needle for them. And
Mm.
part of the problem might be, I don't know, I was like digging into it last night because if their product makes too much sense to me, so I'm like maybe it's a user error on their end, or
Mm-hmm.
maybe like I don't know, AI workloads just aren't transitioning into higher Atlas consumption because the way that traditional applications workloads used to do. So what I mean by that is consumption based models that if applications are built in ways that don't consume as much database compute as expected, or if enterprises are kind of like way early in the experimentation phase, then maybe Alice just isn't seeing the demand lift it should yet. So like, AI workloads aren't just like a lift and shift of off of traditional applications. Like they often involve brand new architectures. They often embed models, and there's a lot of vector retrieval that's required. So maybe it's just like MongoDB isn't Alice isn't embedded deeply enough into these workflows, and they might just be losing share to companies that are. So
Yeah, I was gonna. Does it sound like a go-to-market issue versus product? Like, what else would people be using if not Atlas?
that's the thing. There's so like there's so much competition in this space. Like
Yeah.
you have Amazon with OpenSearch, you have Google with BigQuery and AlloyDB, I think, is their two products. And then you also have Microsoft, who's obviously building AI capabilities right now directly into its like database offerings. Like you have hyperscaler competition, and they're
Yeah.
aggressively pushing their own database solutions. But MongoDB is cloud agnostic, so like I do think like that is somewhat of a benefit for them, and they're very developer friendly. The big cloud providers that is called out have a distribution advantages that make it easier for enterprises to um, default to their own first party solutions. So like that is somewhat of a walled garden approach that MongoDB is dealing with. But I don't know if enterprises are deploying AI at increasingly uh, if they're increasingly opting to for end-to-end cloud native stocks instead of mixing and matching of best of breed tools, like MongoDB's growth trajectory is going to look much more gradual than it should. And that is fear. That is like a real fear I have. So I don't know. I think it's it's worrisome. I'm like a little worried, and I had 75 shares. I trimmed it to 50 shares,
Right.
and I they're in proven mode. They're in the doghouse to me. And look at
Oh no.
I don't know if I was itching my forehead, but like MongoDB is causing me to freaking hive on my forehead. That is a no bueno.
In the doghouse. Well, that's excellent voiceover as someone who's been in this one for a while. For anyone else, if you're on Stocktwits, you can see kind of the story behind the stocks and the why it's moving feature that uses AI to pull in all of the reasons things might be moving. In case you're wondering, let's shift. I know you mentioned hyperscalers. Let's shift to Zscaler. They popped 5%. Shay, you got any hot takes on those guys?
It was a good quarter. It wasn't great. You saw it reaccelerate. They beat across the board. They really was. I'm pulling their numbers up right now because I was digging into MongoDB all night last night. So I was surface level. Yeah. So I mean, they beat substantially, to be honest. Like their billings was a massive beat. I think billings was the biggest tell for me, where estimates were 720. They came in at 742. That's a substantial beat. So their billings are growing 18% year over year. And their free cash flow margins was, whoa. They beat, they're supposed to be estimates of 71 million. They came in at 143 million. They 2x'd it. So like that was incredibly strong. It's just their guidance again was very in line. They're supposed to be growing 22% for this upcoming fiscal year, with 21% operating margins, all very in line. Rule 40 score 43. It just they're just not accelerating, to be honest. They're too niche for me to be excited about it. Like they are in a very crowded SaaS space and in cybersecurity. Like it's a very crowded space. They're the best in what they do. It's highly crowded and it's niche. It really is very niche. It's not like a CrowdStrike who has an 8+ modules that get adopted, and they're just becoming the all-in-one cybersecurity platform with like multiple growth lanes, next gen SIEM, identity protection. Like they're not just an endpoint security company. Where Zscaler is just an edge company at the end of the day, and edge is looking very commoditized. And I just don't know what makes them super special. They're a great company. It's just you can't just be a really good company anymore. Like you have to kind of have that special platformization angle, and I just don't see that for Zscaler right now.
You need that special sauce. Moderna. Looks like they had some insiders double down, put some more money into the company. That's always a good sign. They ripped 15%. I know they've been kind of going through it based on news from the health sector last few months. They also had a court ruling in Germany go in their favor. Moderna, do you think that one has some upside, or what do you think about that one?
Such a dead company. I don't know what they're. I know the CEO just bought a ton of shares, so like maybe that's causing some confidence. I think there's a cancer angle or oncology angle but they missed their shot. Like then they're printing cash during 2020, 2021. Like they didn't really do much with that cash. They should have explored new growth lanes. Like I know I'm bullish on genomics. Like I really am bullish long term. Who knows when that's going to occur? But like that, for example, why not expose yourself to the genomic space? Like there's tons of companies in biotech that are dirt cheap, to be honest, trading close to their cash value that have really strong science. Like go the acquisition route. Like you have tons of cash right now. Like why not acquire, land and expand a bit? So yeah.
Yeah, I feel like when they have the insiders dump more in it, they should report what percentage of their net worth that money reflects too.
Totally.
That would be interesting. Yeah, and I know Pfizer's out there talking a lot about how their COVID windfall, they're putting that into oncology as well. So that's a big kind of next step for these companies. They're like, what are they actually doing with that cash? We have some economic data dropping today. Durable goods orders, GDP growth rate. That's a big one. And initial jobless claims. So we'll look out for those. And then we have some earnings on deck. Pre-market, Novamax, Norwegian Cruise Line reporting, and Penn Entertainment. Every time I see that name, Shy, I remember when they bought Barstool, and then Barstool bought them back for $1. And that's just such a weird storyline to me.
It is pretty weird, I'm not gonna lie. It feels like a petty back and forth, but
Hey, and then after hours, we got Dell, Open Door, and Sunrun. Any of these that you're watching in particular, Shy?
Let me see what today. Sorry, I'm on today's earnings. There is some earnings today. I'm looking right now. Yeah, so
Like
I
Open
will.
Door, what I haven't heard. Like, what
Well,
have they been up to?
I mean, they're not doing well. I
I
think.
know
I think
I
real
was
estate stocks are suffering hard.
that was
But
in my 2020 portfolio for sure. It
I
was a
think.
dog.
I mean, this afternoon, like you have Costco. I know Costco releases monthly numbers. Like that's a really
Yeah,
expensive, high quality name. But you also have
yeah.
Broadcom. Broadcom's reporting
Mm.
after the bell, and like you're seeing Marvell this morning get destroyed, and you're seeing Astera Labs not do well either. So I think like networking within the IT infrastructure for is in somewhat pressure. I think maybe there's just not as much reacceleration as you thought there would be. Expectations are just getting rebalanced, whatever it might be. I think you're seeing the decline in network revenue from Nvidia when they report their earnings. That's because they're losing market share in networking towards the Broadcoms out there. So I think they would do just fine. I think right now nobody really wants to be in semiconductors. It's just a really bearish spot to be in the market.
Yeah. Do you think that's
Another
because the supply chain is like so global and it's the tariff thing, or is it something else?
it could be the tariff thing for sure, geopolitical risk, but I also think like the DeepSeek news is it validated what the inevitable path was going to be for AI, where LLMs were going to be commoditized, AI tools were going to get cheaper and cheaper. It's a race to the bottom. They don't really know the implications of that yet to semiconductors. It's not going to happen in a matter of months. Like it's something that will structurally change over the course of the next year, 2 years. So I think like there is somewhat of fear of like post DeepSeek, like how's that really going to impact the revenue flow? And you're also seeing capex plateauing a bit on the big hyperscaler side, so it's a weird time to be invested in semiconductors. It's in
Yeah.
digestion period for sure.
We also had Grinder miss yesterday. I'm like been obsessed lately with looking into the publicly traded dating apps. Uh, just because I'm in there. It's a war zone, and it's also a war zone for investors, especially investors in companies like Match and Bumble. But Grinder, they're down 12% right now. They missed on their earnings, but they've had such a different trajectory than Match and Bumble. Match and Bumble bleeding paying users. Grinder grinding it out. They're doing pretty good, except for they had a bit of a setback yesterday. But yeah, I've always fascinated to see kind of how these trends evolve, and all the studies coming out saying like Gen Z is kind of getting off the apps, and where is this going next? But it looks like from what I've read, it's becoming a smaller, higher concentrated user group spending a lot of money. And so it becomes how to monetize that group more efficiently versus trying to scale and monetize everyone. I don't know if you haven't. Where did you meet your fiance, Shy? If I can ask, was it on an
Hinge.
app?
It was on
Hinge.
Hinge. Yeah.
I was gonna guess Raya for you.
Right. Nah.
You seem
I'm
like a
great.
Raya guy.
Yeah, the F boy era, mate. Yeah, for sure. That's. I mean, I think Match and Bumble like that is very. It's those high spending customers. They're F boys, and they're
Yeah.
also like those kind of character traits. Like you'll probably continue to just want to live the bachelor life, and same with bachelorettes. Like sometimes like women don't want to be in relationships. They want to
Yeah.
do. They don't want to sacrifice their freedom to a partner because they're living in their prime. Like that's
They don't want some
like
guy talking to stocks about them all day, Shy.
100%,
You know?
100%, wasting their time on boring numbers. But no, I also think there's somewhat of what's interesting in dating apps. Like there might be an AI angle there on like if they can actually solve, if the AI can help an algorithm
Mm-hmm.
make it so custom for your own preferences that it can be an interesting way of like, whoa, like I'll actually, it can be like, what's that Black Mirror episode when it's like
Oh,
that dating episode? I forgot
is
what it
it
was
the one where
called.
you can like rate people like Yelp reviews?
That was an insane one. I think it was the other one where like you have a specific time amount on like being with this person or
Okay.
as some regardless, like there's we're entering that future and it's gonna affect dating substantially. Uh
Yeah, it's weird. I mean, I was talking to a friend the other day. Like, my background's in marketing, so like I understand like advertising, and like on Hinge, you can basically like Google search ad yourself. So you can put like $20 to boost yourself, and you'll wake up the next day and you'll have like 200, and you're like, all right. And then you start going through there and you're like, okay, maybe not, the personnel, but you can start to think about like, okay, if I put like $50 against this a month, numbers wise, that starts to get weird, but it is, I guess, at the end of the day, a numbers game. So good luck to everyone else who's out there just in the trenches, fighting it out, fighting the good fight. Stay strong. I know we have another breaking crypto news announcement here. I need to read it because it's so breaking. It's literally breaking my laptop as we speak. Looks like Sui Network is partnering with World Liberty. That's the Trumps. There you go. Your crypto trader of the year. That's a DeFi protocol, and looks like they're gonna include Sui. Is it Sui or SWI? I'm guessing Sui. In their strategic token reserve designed to bolster leading Web3 products. If you're involved with this project and you want to correct me on how to say it, feel free to shout me out on X. So it looks like, these World Liberty making moves and just seemingly doesn't really care what anyone thinks about potential entanglements with government employees. So that's hot off the press.
I mean, this is the classic example of like, I don't think Trump cares about the equity markets anymore. He's making bank in the crypto markets. He's making his buck.
Do you think Eric Trump like gets crypto? Like, do you think he understands like blockchain?
I don't think so, because I don't know. His chin indicates to me he's just like, I don't know. People like her. I just don't trust people with the chins like that in powerful positions. No, I'm just joking about that. But I don't know. I don't think he's as intelligent to truly understand blockchain. Like, I think he understands momentum. He wants to capitalize on momentum. So I think he's just riding that wave. But if you ask him the technicals on the back end of like how disruptive that technology is going to be, like, I can promise you his chin's going to like shake a little. I'm just like, I don't know.
There is something off. But I think you hit something really important, which is like where it is right now. It's like there's a certain subset of all this where like, do you even need to get it? Like it's the momentum thing, and like that's all one big part of the movement now. And the people who are purists and the Bitcoin maxis would kind of poo-poo at that take, but at the end of the day, these are just things getting traded, whether it was the NFTs a few years ago, now it's the meme coin. It's like always something, and it's the same sort of vibe. It's like, oh yeah,
totally.
Let's hype this thing up, it goes up, I sell, boom, next one. So it's wild, and I'm sure we'll hear all more about that at the Crypto Summit on Friday. I saw some rumblings on crypto Twitter. People think they're going to announce something big, although I don't know what that quite is. There was also another remark, I think it might have been Lutnick, don't quote me on that, saying that Bitcoin is going to be kind of central to that reserve. So they sort of walked back. I know we were talking about, he came out hot with Solana and Cardano and Ripple, and then was like, oh, Bitcoin. It's going to be mostly Bitcoin, it looks like, but I am sure we'll hear more of that tomorrow. And then post-market earnings moves. We went through a lot of these. China is setting a growth target of 5%. Sparking some stimulus hopes there. JD's up 7%. I know we heard from Alibaba today. Stocktwits poll, 74% of users see more upside ahead for Chinese stocks. Does this fit within your thesis of going outside the US, Shay?
Yeah, temporarily. I'm still not bullish on ex-USA like long term. Like, I think USA.
You're a patriot.
Yeah, I'm a patriot, I guess. But I don't know. The opportunities is here, but I just don't trust China names. Like, you just never know what's going to occur overnight. You also don't even really know like if their numbers are truly accurate. I think it's more of a bucketed trade, if any. So if you ask me about Pinduoduo, Alibaba, Baidu, Futu, like, honestly, they're all tomato on how they move. They're just going to be moving along with each other because that whole thematic is just a large bucket trade.
Yeah. Well, let's take one more look at where things are headed in the markets overall before we send you all on your way to make all of your money moves. Looks like the Dow Jones is down about 1%. S&P likewise. NASDAQ, some red there. The VIX is up 9%. Shay, you still feeling the same way you were 50 minutes ago?
Yeah, I mean, we're like, did we touch that level today? I'm trying to see. We're just sitting at that 493 level. Like, that's the level you need to watch out for, guys. Like, it's just like hovering there, just like waiting for something to occur. And I'm telling you, if we break through 490 specifically, capitulation will occur. It's going to happen. You're going to see a 3 to 4% down day at one point. Like, that's what I mean, capitulation, like a VIX exploding to 30, 35, 40. You're seeing these uh, like this, you're going to see a lot of commentary on like employer, like the job cuts today. Like, that's going to be like, oh, is this a new trend? Like, is recession going to be a reality? We're not going to have the growth. We're not going to have GDP growth because of this high stakes poker game. Like, companies aren't going to be like really, they're front running a lot of like the potential tariffs. Like, it's just like he's breaking the system, hoping for short-term gain, long-term gain. But I don't know. Like, it's also too late to buy hedges, guys. Like, this is what I was saying in the whole month of February and January. Hedging is cheap right now when the VIX was at 14, 15 bucks. It was cheap. But I bought some June expiration hedges, sold them once the VIX 2x, but now is not the time to hedge. This is why like you kind of need to have that mentality on. I think the first 100 days or even the first half of this year will be choppy and volatile when Trump has all these different moves he wants to make and the market hits uncertainty. Like, the market's not really pricing any kind of major pullback. I'm gonna buy some hedges just to protect myself based on the VIX being at 14, showing that it's not really volatile when clearly that is the case. That volatility will be here to stay until we deal with all this noise. But that's why you have to front run these moves. Like, people want to buy protection. You don't buy home insurance when you see the roof's on fire in your house. You just don't. Like, it's too late to do that. Same methodology happens for investing.
What were you seeing then, Shay? Like, people can learn. What were you seeing? The roof wasn't on fire. What kind of signals did you pick up where you were like, okay, I'm gonna start hedging?
Once I started seeing the tariff talks occur, I was like,
Okay.
I don't think this is just going to
The
be like
whispers.
the whispers, you might say. And also, like, really the fuel that drove it was the big tech earnings. Once I saw, like, they were always the catalyst, like the high floor of any kind of market, macro driven pullback in the markets, because big tech was just earnings were doing really well, and semiconductors were doing really well because you just heard commentary that capex is going up and up, risk of overinvesting is far greater than underinvesting, etc. This most recent cycle, that was the first time I started feeling the plateau in capex spend. Yes, that was the first time I felt the new cycle begin for big tech on them across the board, treating this year as an investment cycle year. So I was like, oh, so as tariff talks might accelerate, there might be some more FUD in the market headline wise, macro wise. There was a time when big tech saved the day. Those earnings indicate to me that's not going to be the case this year. So I was like, okay, so now I don't know who's going to be the safety net on a macro driven pullback. And you're seeing that this year where Mag 7 is like down much more than the market. They're not the safety net anymore. Semiconductors are not the safety net anymore. The market rally, the breadth widened in the market rally recently, but the mid cap, small cap growth names, they're not going to be a safety net for any kind of macro driven pullback. So once I saw like the floor was kind of getting removed a little on any pullback, I was like, oof. So like I think that was like I need to buy some safety because this is a new character change that has not been there for 2 years. And unfortunately, I was right. I hedged. I went from 20. I was up 22%. I think I'm up 5% now. So like I'm still down 17%.
Yeah.
It's brutal, but you kind of have that long term mentality of zoom out. Like,
Yeah. Trust your gut. Sounds like
yeah.
you woke up with the night sweats and you fired up Robin Hood and made some moves. But I think, yeah, it's just interesting to hear kind of how you think about those things, because I think some things that might be instinctual to you as you've been doing this so long helps other people to sort of replicate, okay, I saw this happen, I saw this happen. Well, it looks like, it's been a great week, Shay. I got to say, this is our first week doing the show together, and I've very much enjoyed this. And thank you to everyone for tuning in. We hope you were entertained. And as a quick plug again, do not forget to vote for Shy in the Cashtag Awards. Also vote for the other things, but go vote. That's happening April 30th in New York. Shy and I will be there, so hope to see some of you there too. And
Yeah.
I hope everyone has a good day.
Thanks, everyone.